All right. What's going on, everyone? Happy Thursday. It's Eric Sztanyo from Keller Williams Realty and TeamStanyo.com, where we are helping you find your home and strengthen your family. Um, let's talk about the market today. We're going to look at the Cincinnati real estate market. We're going to be talking about housing prices, where they're at, what's been happening since the rates have gone up. We're going to look at inventory. We're going to get a feel for the overall market and what's happening in 2023. It is very interesting. It's very interesting. I can't wait to kind of show you guys what's happening in terms of both prices, inventory, and the amount of units sold. So you're probably hearing a lot of headlines out there about the real estate market being down, and it is and it isn't. We're gonna get into that. So we'll show you the charts on that and kind of talk through the data, and then try to give you guys a good feel for what does that mean if you're looking to buy, what does that mean if you're looking to sell, and so you can make the best decision for you and your family. Also, there is a Q&A, so the chat is live. If you want to pop in a question or say hello or make a comment, feel free to drop your questions into the chat, and I can get those answered. Anything about the market or just Cincinnati and Northern Kentucky in general, happy to share any info I can today in this time that we have together. So pretty excited about that. Normally, I put out a recorded video on Thursdays. We have one coming up that's super exciting to me. But we've got to almost finish. We just got to get it. We got to run it by the owner and the builder, because we've got this amazing luxury mansion that I was able to go check out a week or so ago. It's in Union, Kentucky. It's surrounded by acreage. So it's kind of like completely private, and it's like you're driving up on a castle. It's unbelievable, multi-million-dollar mansion. So that video, tease is coming out soon. I think you guys are gonna like that one, and then we might even get to do a few more cool luxury homes coming up here, just so we can have some fun with that. Let's get into this market and talk about where things stand. Give me 1 second here. And by the way, the office, forgive the bright morning sunshine in the back. I'm thinking about potentially changing the recording studio up a little bit. Maybe going to the darker room with like the LED backdrop, just so like the light's not crazy for you guys every time. But you let me know. If that doesn't matter to you, then I won't do it. But if you're like, yes, make a better YouTube background, then I will do it. But part of that is just, I feel like I can't record in certain times of the day, and that is limiting when you've got 5 kids and you only got certain time to record. Okay, let's get into this market. I'm going to show you some charts. We're going to look at the median price. I'm first going to go back 2 years here, and this is the Cincinnati market. Let me just get my setup here so I can see what I'm showing you guys. Okay, so this is for Warren, Butler, Claremont, and Hamilton counties. So those are kind of the 4 counties on the Cincinnati side where I pulled this data from. This is going back the last 2 years. This first chart we're looking at is the median price of homes sold going back the last 2 years. Okay? So what this is showing is the median price back in April of 2021, if you can see that, was $240,000. And that has jumped currently to April of 23 to 280. And median, comparing the entire period, the median price is up 6%, though 40, that's not right. Let me look at that. 40 divided by 240 equals, it's a total gain of 17% over the last 2 years for homes in April. So, but what I want to kind of show you guys here to look at in particular is a lot of people have kind of thought, a lot of buyers are thinking that since interest rates went up, you would expect to see lower prices here in 2023. And we did see that for a time. We're going to show this story here kind of in these ensuing charts. We did see prices start to come down last fall into the winter when the rates went up really quick. It really happened towards the end of last summer is when it started. And so rates went up fast. Buyers kind of put a hold on things. Sellers did as well. So that's part of this story is, we work with a lot of buyers on this channel because a lot of people are moving to Cincinnati. So in our business, we probably work with more buyers than sellers. But some of the agents in the office who I'm talking to who have more listings than buyers are saying the people who are selling their home, most of them are not selling and then buying again. Some of them are, but most of them are selling because they're either moving out of the city or they're downsizing, or maybe they have some reason why they need to sell where they're not just choosing to sell. And the reason why is maybe they locked in that rate at 3%, 4% in the last few years when they were really low. Now they're looking at things that are in 6 to 7% range, and they're like, yeah, I've got all this equity in the house and I could sell and cash that out, but then I got to buy a new house at 6.5% or whatever the interest rate is. And so what that's done is squeezed inventory. So we're going to keep painting that picture here. But what we saw in the prices, you can see, they kind of hit their peak last June, which is, what is that? It's a little over that 280 number. So that's closer to that 290 in terms of the median in the market. And then as rates went up in July and August, we see that prices did come down, up until January of 2023. And that's standard when you look, when you kind of look at the market going back 2 years, which we didn't have the rates go up as much. They didn't go up in 2021. You see that prices go up till June, and then they kind of come back down until January and then go up again. But they went way up, in 2022. And then they came down. But the one thing I want to show you here is that April of 20, and in fact, I might do this on a 1 year basis here. Give me 1 second. Let me switch this. Okay. So here is just the 1 year pricing change. So April 22, that number was 258. April 23, that number is 280. And so we're up 9%, 8.6%. In that median price change over 1 year. And so that, what's important to kind of, again, understand in that is we had that interest rate gain, and yet pricing is still going up. It did go down a little bit in the fall and winter, but now year over year, just 1 year with the rate hike in between, pricing is up in April from 258 to 280,000. Now that's not happening all over the country. There are different cities I was just looking at yesterday across the country that are seeing pricing a lot, and a lot of them are boom towns, a lot of them are tech towns, a lot of them are towns, I say. A lot of them are cities that where crime might be out of hand. So the number one city that's seeing price drops right now is San Francisco, and that's kind of a double whammy, right? You've got a lot of tech jobs heading out because tech's kind of seeing a hit, and they've had issues with crime. So San Francisco, I've seen Austin, I've seen Boise, which had a boom. You are seeing prices go down in some of those cities nationwide. I'm getting a lot of calls from people from Chicago who are like, we're done with Chicago. We've had enough. And so we'd like to move to somewhere that's a little bit less crime, and prices are not as crazy, taxes are not as crazy. And, they're looking at different areas. So oftentimes when you're looking at that, it's, a lot of the cities that have seen the biggest gains in prices are these Sunbelt cities. Texas, a lot of cities in Texas are seeing the biggest gains. Florida is the other state where you're seeing a lot of gains. Sunbelt cities, because you have both people who have moved kind of post the COVID migration, where you can take your job with them moving to those Sunbelt cities. But you also have large investment companies that have been buying up real estate in those areas. So you've had both buyers and investment companies building up those markets, and prices have gone way up. Cincinnati is interesting. I was having this call with a client the other day. It's like, we're just kind of right in the middle. We kind of like put our head down. We're not in that Sun Belt where prices have gone way up. We're certainly not seeing price reductions. And, if you're looking for somewhere that's kind of right in the middle, Cincinnati might be a good spot for you, where prices are still, Yes, they're going up, but they haven't skyrocketed. So okay, so that's chart one that I want to show you is, prices going up from 250 to 280, and let's go to the next chart here. 1 second, let me get that pulled up. 2 years transition. Okay, now I want to look at. I want to show you guys supply and demand. This is the chart that's really starting to blow me away on what's happening in 2023. So, okay, same. So this is a 2-year chart. Same count. Whoops. Let me transition this. All right, here we go. 2-year chart and showing on a monthly basis the amount of supply and demand. The red are the amount of houses that are for sale, and the green columns are the amount of houses that are sold. Okay. So what's really interesting to me, we've been in this place for several years now where I keep saying, man, inventory is really low in Cincinnati. And we've been kind of hoping that builders would build more homes, because it is the reality right now of the market that we're seeing is, and every agent's kind of saying the same thing. It's like, I've got buyers who want to buy and there are no houses to buy. When I say there are no houses to buy, there are some houses to buy. We've got, I don't know, 10 or 15, clients pending on homes right now. But in context, historically, the amount of inventory on the market is incredibly low. Now, what's interesting is what we're not seeing that we saw in 2020 and 2021 is while inventory is very, very low, we're not seeing as much. There's buyer demand, but there's not as much buyer overpaying as we saw previously. Now, you'll still, a home that's priced right, it's in a desirable neighborhood and shows well, both online and in person, and it's in a good condition, that will still see multiple offers. But in 2021, 2020, we may have seen 10, 15 offers. Now you might see 2 to 5. So, and whereas in 2020 and 2021, you would see a lot of buyers waiving inspections or doing appraisal gaps as well. In 2023, you might see some of that, and those might be the offers that win, but a seller's not getting as many of those. Why is that? Interest rates are up at 6.5%, and so and prices continue to climb. So home prices are still climbing, inventory is still low, but your monthly payment on that same house where that costs more to get, you have a higher monthly payment as well. So the buyer's ability to throw out kind of crazy offers when interest rates were a lot lower, where you could get something around 3%, or 3.5% or something like that in the last 2 years, that's changed a bit. And so what has that, you coupled that with what I mentioned before about sellers not necessarily wanting to sell just to sell, and you get this chart, which is the amount of properties for sale is down 15%, so you have less inventory, and the total amount of properties sold is down 26%. That's a big deal. And let me tell you, for real estate agents, they're like freaking out. Like, if imagine, whatever you did in your business and the numbers are down 30%. So it's not that it's any easier for you as a buyer, but the amount of units sold is down nearly 30%, 25, 30% of the entire market that's being sold. Prices are still up. The amount of homes being sold is down. And so that's putting a big squeeze. So there's a lot of real estate agents who, if you're only doing a few deals a year, you imagine cutting that by 30%, that's squeezing the industry. And those are the headlines that you might be seeing of like, the real estate market is down. But it's, what you need to look at is what is that headline saying? Is it saying sales volume, like of units sold, or is it saying, prices are down? And so the overall sales volume is going to be down because the amount of units sold is down. Does that make sense? But the price of each home is up. So, take that for what it's worth, understand what that means for you as a buyer. It's like, and this gets into the kind of the third part of my title for this video was like, should you time the market? Should I wait to buy or should I wait to sell? And if you're waiting because you're waiting for the market to drop out here in Cincinnati, like it's just not going to happen. It can happen, right? But like pending national global economic crisis, we don't have the inventory for prices. And basic economics 101. I feel like I've said this in every video for the last 3 years. Like supply low, demand high, prices go up. And that's where we still are here locally in Cincinnati and Northern Kentucky, because there's demand and there will continue to be demand because we are still an affordable city compared to a lot of other places people could move to. So you've got people moving in. You've got not at like a crazy rate of like people moving to, Houston or whatever, San Antonio or Orlando or or Nashville, pick the Sun Belt city. We don't have that kind of population growth, so prices haven't skyrocketed. But that ensures that prices aren't going to go as high as those cities, and therefore we're still going to be an affordable city where people are going to want to move. And in terms of the supply, builders are still trying to catch up from a 12-year deficit where they didn't build enough single-family homes, in that post 2008 Great Recession. We're just short on supply. And so, the people who are really, really, really getting squeezed right now are those first-time home buyers. Like that's the hard. If you're trying to buy anywhere from like 150 to 250 in that price range, that's just such a difficult market, because that's where a lot of people are at when you're buying your first house. And your financing might be FHA or VA versus conventional or cash. And you might be competing against cash investors or cash buyers, other people who might have a relative helping them buy with cash. So if that is just the market that's like so hard. And then as you go up, you can imagine the most buyers are kind of in that pool. And then as you go up in price into the 300, 400, 5, 6, 7, 8, 9 and above, like the buyers kind of thin out as you go. So those buyers have a little bit more choice, and we'll show the next chart here, which is amount of inventory. But just going back to this, that's kind of what's going on in the market. Is prices are up, but the amount of units for sale is down 15%, and the amount of units actually sold is down 26%. So you've got less to choose from, but prices are up and rates are up, and that's when you get a lot less homes sold. So those numbers were in April 2022, 1,925 units were sold in Cincinnati MLS in these 4 counties, and in April 23, that number is 1,384. So that was a 28% drop. Oh, I kept saying 26, but it's 28, so close to 30% drop. That's the number that I didn't look at. I was feeling this recently because I'm like, man, it's hard to find good properties for my buyers, and when we do find one, it's like we still got to be competitive, and we got to have that conversation of like, hey, look, there's not a lot out there. If you want something, we still need to be pretty aggressive. And sometimes we put in an offer and you lose out because someone was willing to be more aggressive, and it's like, okay, how aggressive are you willing? That comes back to your motivation and how, as a buyer, like, how badly do you want this house? And we can coach you through that and, say, if you want to be really aggressive, here are the things to do. And that could include, an offer over ask price. That could include with inspection, oftentimes we might do like, not asking for any repairs under a certain amount for any particular item. So you could say, hey, Mr. Seller, imagine like sellers would want this. We're not going to ask for a repair on any single item that costs less than $500 to repair. But if it's a bigger item, like you need a new furnace, or you need, there's some work in the basement that needs to be done. That could be like an $7,000 fix or something like that, or $10,000 or more. hey, we reserve the right to still ask for those things, and it gives you protection as the buyer for a bigger item that might come up in the inspection. But on the smaller items, you're like, we're not going to sweat it, whatever. We'll deal with the leaky faucet and the cracked sidewalk and the piece of siding that's broken. Like those things, you're like, whatever. And for a seller, they're like, great, I won't have to mess with that stuff. Another thing is what's called an appraisal gap. So in this last week, I had two buyers who got under contract because we offered higher, and both of those clients, the appraisal came back lower than the contract price. So we're as of today, we're writing addendums and negotiating with the sellers, where we're basically lowering the purchase price. So that, but in an appraisal gap. So what that clause means is, let me explain this really quick. So if you guys are looking to buy in this market, we can have this conversation ahead of time. Let's say the house is listed for $275 and you offer $300,000 for it. But the appraiser, and you win the contract. You're under contract as a buyer, but the appraiser says, hey, so glad you are under contract for $300, but I looked at the comps and I say that this house is only worth $290. So now you got a problem because the lender is only going to lend up to that $290, and now you've got a $10,000 difference between the appraised value and the contract price. So the way the contract states in both Ohio and Kentucky is you got to figure that out with the seller. If you can't figure it out, you're protected, and if you can't negotiate with the seller, you can actually back out. There's an appraisal contingency in the contract, but usually what happens, so you either have to come up with that $10,000 yourself as a buyer, you have to pay for that cash, or the seller needs to come down on the purchase price $10,000 to $290, or you meet somewhere in the middle. So that's what you have to do if the appraisal falls short, because you bid over what the appraiser says it's worth. Now, another thing we can do, which we've done with our lenders, in fact, this happened on one of ours, is we could go back to the appraiser with other comps and say, hey, can you reconsider this? And on one of ours, that helped save our buyer a lot of money because it appraised at one value. We showed some comps and they went back and looked at it again. They're like, okay, we'll bump it up a little bit. So that was really helpful in getting this thing, a much smaller gap now between the appraised value and the contract price. Follow me here. An appraisal gap clause in the contract, in your offer, if you put that in, says, hey, even if, so let's say you offer that 300 again, and you say, hey, we're willing, if it doesn't appraise, to cover that gap up to whatever number you're comfortable. So let's say $10,000. So that gives the seller surety that even if it doesn't appraise for the offer price, they're still going to get that money. So in a very competitive market, we saw a lot of that happening in the last few years in 2020 and 2021, where people were like, yeah, look, I'm going to bid over and I'm going to cover the difference if it doesn't appraise because I want to win. That's happening less and less right now because people, like I said, the rates are up and there's a little bit less competition in those offers. So, buyers are willing to do that a little less. But if a seller gets that, they're probably going to go with that offer, if that makes sense. And now they might get one of those versus last year or 2 years ago, they might get 5 of those, which was just, it was crazy. We're not quite in that craziness. Okay. So that's chart number 2. Chart number 3, I want to show you guys, is the month supply of inventory. And this is just showing what happened, again, going back. Oh, this is just 1 year. Sorry. And this was 1 year. I guess, am I showing you the 1 year chart? Hang on. Yeah. I'm showing the 1 year chart right now, which is fine. So going back 1 year on inventory, this is fine. Let's look at this. This plays out exactly what I was talking about before, which was the end of the summer is when the rates went up. And usually the end of the summer is when the buying season slows down anyway. But rates went up and then ding, 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 ding. September, October, November, and December, inventory actually went up and almost hit 1.8 months of inventory. And what that means is that if no other houses came on the market, everything would sell in 1.8 months. So that's the highest we got to. And I think that's the highest we got to in the last 2 years. And so when rates went up, we did see inventory go up here. And this other line chart tracking with it was the I believe it's the average days on market. So it was around, it doesn't show down here, but it was around 10 days on market. It dipped down to maybe 9, and then it creeped up all the way up to almost 30 days on market. So back last fall in December, you actually did have a little bit of a choice when you were buying. It was like the first time in several years where you're like, hey, this is the best time it's kind of been to buy, minus the higher interest rates. And so that's what kept people from wanting to buy. And that's what's so crazy about, trying to time the market here. It's like, pick your poison. Do you want to mess with the interest rates and think that they're going to go higher? Like, do you have a crystal ball where you can time what the interest rates are going to do? Like, do you want to try to depend on what the Fed is doing or not doing? And like, do you think they're going to stop printing? Like, do you think inflation's down to a point where they can pull back on interest rate? Like, it's so difficult to try to do that. That's why I usually say, like, what are you doing for your family? I'm typically going to say I would rather my money, especially in an inflationary market, be linked into an asset that can serve as a hedge against inflation, that's going to rise with some appreciation, as opposed to paying rent and like not getting any value of that appreciation, just watching your dollars melt away to the inflation giant. Like, could you get a different rate? Like, could you wait until the market falls and home prices go on? Like, yes, but like, you also didn't get use of the home for that entire time. Like, so timing the market is kind of like, do you need a house or not? Or do you need to sell or not? That's kind of the way I think about it. Timing the market's going to be very difficult. And if you look historically, over the last 50 years, going back to the 70s, or even going back to the early 1900s, home prices go up year after year. There's only been a few times where home prices have gone down. So unless you have a very short-term, like if you're only planning on living in the city for a year or two, then we might be like, yeah, I don't know if it's worth it you might not want to buy, but if you have a longer time frame of like maybe 3 years or more, chances are home prices are going to go up where you're going to be good regardless of where you get your interest rate at. Days on market went up, average inventory went up through December, and then poof, like we go into January 2023, and instantly people start buying again, February, March, and April, and now inventory again is down, at 0.7 months. So it's slightly up from 1 year ago, but it's basically the same, 0.7 months to 0.8 months in terms of the amount of inventory for sale. So that's where we're at. It's kind of crazy. That's where we're at. I'm checking the chat. I don't see any questions. So hopefully this video is actually playing on live. I need help with my live skills. But that's an update on the video. Hope that was helpful for you guys. Again, if you're looking to buy or sell in this market, you got more questions, try to get this data out there so you guys can understand and make good decisions for yourself, and at least understand what the market's like, so that if you are ready to buy, we can put the right strategy in place for you to help you get the house that you want. All right, that's going to do it for today. Like I said, I'm excited about the video that's going to roll out probably next week in terms of that mansion, that luxury mansion that's coming out. But if you guys have any other questions or are looking to buy or sell, feel free to reach out to us. Email me at eric.sztanyo@kw.com or call us directly at 513-813-6293. Guys, thanks for watching this. Hope it was helpful for you, and we'll see you next time.